Most people think the rich become richer from earning more. Do you think so too? But that's not the game. The financial elite hardly ever sell their largest assets, and that's how they get richer every year. Instead of cashing out, they have clever tricks up their sleeves to put their wealth to work in the background without making a sound. The real question is why selling makes them poor and holding makes them unstoppable. In this regard, I would like to share some important points with you. So the financial elite are into owning assets like businesses, stocks, and real estate, because those are things that appreciate and generate income over time. Most of the common people survive on salaries. Real financial power is in ownership, and rich people know that. Money only comes from a salary when a man is working, but assets can generate income for you even while the owner is sleeping. One of the biggest differences between the middle class and the super rich is this distinction. Thus, for example, when rich people invest money in successful companies, they make money as the company grows. Over the years, stocks tend to go up in value, and many companies also pay dividends, which provide a steady income. Also, real estate properties can give monthly rentals and can also increase in market value. You may buy a building today for $1 million, which may be worth several $1 million in the future. Such an investment makes the rich rich by constantly laboring to make them rich. Another powerful asset is business. If you own a business, you own a system that can make money. They create ways for money to flow automatically through products, services, and investments instead of trading their time for money. The super rich love assets. Assets protect the super rich from inflation and economic uncertainty. Cash depreciates. Good assets usually appreciate in strength and profitability. This long-term strategy helps rich families to transfer their wealth for generations. They retain their assets rather than cashing them in because ownership offers stability, influence, and ongoing growth. The financial elite understand that assets are not just things to own, but they are powerful tools that create long-term wealth and financial independence. Divestment is something the financial elite rarely do. This is because divestment often causes heavy taxes and preserves and increases their wealth through holding assets. In many countries, profit made when a person sells valuable stocks, businesses, or properties is taxed as capital gains tax. For billionaires and wealthy investors, these taxes can amount to millions and even billions of dollars. They prefer to hold on to their assets for long periods of time rather than giving away much of their wealth to taxes. Assets also have the advantage of continuous growth, which the rich can enjoy. Stocks can rise in value year after year, companies can grow around the world, and real estate prices usually go up over the years. The rich do not sell. They allow their wealth to grow naturally through appreciation and compound growth. They know patience can be one of the greatest financial advantages. Another strategy used by the financial elite is to borrow against their assets instead of selling them. Wealthy people have assets that serve as collateral. Banks are eager to lend large amounts of money. That means they can draw on cash for luxury spending, investments, or business expansion without selling their holdings. So they don't pay taxes this way and still have financial freedom. Imagine a billionaire who owns shares worth hundreds of millions of dollars. If he sells them, he has to pay tax on the gain, and he owns less. But when they borrow against those shares, they still own them and can use the money for other things. The assets may continue to grow in value over time, making the person even richer. This approach allows the financial elite to safeguard their wealth and build it for generations. Assets are not things you sell for temporary cash, but rather things that empower you and provide you long-term financial security. Instead, wealthy people tend to borrow money against their assets, providing them with access to cash while maintaining ownership. This is one of the smartest financial moves the financial elite has made. Instead of selling the valuable stocks, businesses, or properties, they use these assets as collateral to get loans from banks and financial institutions. Their wealth is measured in millions or billions of dollars in assets. Banks are eager to lend to them at very low interest rates. This way, the rich can have liquidity without giving up ownership of the assets that are still increasing in value. If they sold shares or properties, they would be foregoing future profits, dividends, and appreciation. Furthermore, the sale would frequently be heavily taxed on the gains. Instead, they borrow and avoid taxes but have access to large amounts of money for personal expenses, investments, or business expansion. For example, a billionaire who owns stock in a successful company could borrow millions of dollars against that stock. The billionaire still holds the shares, and they could still rise in value over time. Meanwhile, you can use the borrowed money to buy luxury homes, invest in new opportunities, or fund other projects. In many cases, the growth of the assets exceeds the interest paid on the loan, making the strategy very profitable. This system also helps the powerful control their corporations and investments. Ownership gives them power, influence, and long-term financial security. If the assets were sold, that control could be lost. Borrowing means they can stay in place and continue to reap the benefits of wealth. The financial elite understand that assets are worth more if you hold them long-term. The financial elite know that real wealth is not made in a day, but is built slowly over time through patience and continuous ownership of valuable assets. They gain stability and long-term control over their financial future by holding businesses, stocks, real estate, and investments over long periods of time. With ownership comes power. People who own large companies, land, or investments often have a voice in the markets, industries, and economic decision-making. Someone who owns a successful company can set its course, create jobs, and take it around the world. Control like this increases both financial power and social power. The wealthy understand that relinquishing important assets diminishes their power and weakens their position, which is why they want to hold on to them for decades. Long-term ownership also provides financial security. Real estate and profitable businesses tend to increase in value over time. Even in recessions, strong assets often bounce back and continue to grow. That shields wealthy families from inflation, market volatility, and financial crises. Rather than relying on a monthly salary, they rely on assets that continue to generate income and appreciation year after year. Wealthy parents usually teach their children how to manage and protect those assets so the family fortune keeps growing. This is why a lot of the financial elite think in terms of decades rather than short-term profits. They believe that maintaining ownership is the key to maintaining power, developing wealth, and creating a legacy for generations to come. The mentality of the financial elite is to be patient, to invest, and to preserve assets, not to spend money on short-term luxuries. The financial elite and ordinary people are completely unique in the way they think about money. Many people are quickly spending their income on fleeting pleasures such as expensive cars, designer clothes, and luxury vacations. Wealthy people, in contrast, usually spend their time creating and preserving things that will grow their wealth over time. Financial growth requires patience, and the financial elite know this. They understand that real wealth is usually built slowly, through long-term investments and wise decisions. They don't go for quick profits or spending sprees, but let their investments grow steadily over many years. Stocks, businesses, and real estate can often increase dramatically in value over time, especially if profits are plowed back in. That compounding process helps them grow their fortunes constantly. The financial elite is concerned with asset preservation. They protect their assets because they know that these assets are the foundation of financial security and power. A moment of pleasure can cost you a good investment and make you poorer when you are older. Therefore, they focus on retaining ownership and passing assets to future generations. The rich may live in luxury, but their main concern is usually to preserve and augment their wealth. Their long-term thinking, discipline, and patience are the main reasons why they keep being rich and financially influential through generations. Thanks for watching. Like this video and subscribe so you don't miss the next one.